Hello, good morning, good evening, good afternoon, depending on when you're joining us today. My name is Corey Daharsh. I am joined today with special guest Rodney Robinson II, and we're here to bring you the educational topic of real estate investing for working professionals. Again, my name is Corey Daharsh. I am a business development specialist at Advanta IRA. I've been with the company since 2016. I've processed thousands of different investment transactions in various different categories, and I would be very happy to speak with you if you have any specific investment needs. I'm very knowledgeable about real estate investing and any investing within a retirement account. So please feel free to reach out to me if you have any needs in that capacity. And I'm joined today again by Rodney Robinson. He is the founder of Robinson Capital. Aside from investing in real estate through syndications, Rodney actually has a full-time career, is a supply chain manager in the aerospace industry. Rodney, any other tidbits about your experience or profession that you'd like to add to that?
Well, thank you, Corey. Just like many of you online, I'm very busy, and I look forward to sharing with you how somehow, we managed to make it all work, and hopefully it'll be of some good value to you later.
Perfect. Well, thank you so much. I know I have heard Rodney present myself, and I thought he had a great value, so I reached out almost immediately to schedule him to speak to our Advanta audience as well. So I'm sure it'll be great, and I'm looking very much forward to the rest of this presentation today.
Thanks, Corey.
Thank you. So today's agenda, I'm just going to go over some basics on what a self-directed IRA account is and how to invest in a syndication style investment within a retirement account. And then I'm going to hand off to Rodney, who's going to cover his experience and investment journey and some keys that he's picked up along the way to being a successful real estate investor, what works for him, and how he is currently adjusting and working through his full-time career as well as becoming a real estate investor over the past few years as well. I do have listed as the third item your questions and a conclusion. But in this case, if you are able to find the question box, please feel free to throw in your questions as you go, and I will interject them and ask Rodney as he's presenting whatever questions that you may have so we can get those knocked out throughout the course of the presentation today. So feel free to be active, participate, throw any questions out that you may have, and I'll make sure that Rodney has a chance to field them accordingly. So Advanta IRA, just as a company, has been around since 2003, about 20 years in the industry. We've got a little under 2 billion in assets under management through our active clients. And one of the things that we do, two of the things we do actually to stand aside from other competitors in this space is that we pair each client with a dedicated client account manager, which I served for about 5 years with the company. And that person's your dedicated liaison to any investments you'd like to make, any questions you have about self-direction or IRS rules and regulations. And the other thing is this educational content we're bringing you today. Part of the biggest thing in self-direction is educating people that it's an option, how to utilize it, and how it can benefit you and your investment strategies. So we try to spend a lot of efforts on pairing you with someone and giving you that concierge level customer service, and also educating you as best as possible on the options available and how to proceed with any style of investment that you may be interested in, or how to get further information about that type of investment that you have interest. Again, today's subject is going to be multifamily syndications, apartment style syndications, and Rodney's going to cover his journey into that topic and that specific style of investing. So what a self-directed IRA is, if you're not familiar, is a specific type of retirement account that allows you to invest into anything you want to, allowable by the IRS. Now that's different from one of those larger clearinghouse IRA companies that say you have a self-direct account, but only allow you to invest into the market into specific assets that they've done due diligence on and allow you to invest into. A truly self-directed account is something that you can go to your custodian and say any type of investment is something you're interested in, and they'll help you through the process of getting that investment funded. I've got a few examples here on the screen of different types of self-directed investments. And again, today we're specifically going to focus in on syndications and multifamily investing. If you've not heard about self-direction, it is pretty common. Only about 4% of the retirement account industry in the US is self-directed. And a main point of that is people just don't have the education. They're either with a larger custodian that would prefer you to stay with them in their fiduciary guidance versus actually going out and doing something that is a little bit more hands-on with your retirement account. Plenty of different types of plans can be self-directed. You can self-direct your traditional, your Roth IRA, education savings accounts for children, health savings accounts for yourself or your family, and specifically former employer plans are a key way to get into self-direction. If you've left a company that you no longer are part of their 401k plan, you just have an old 401k sitting around, that's prime money that you could turn into a self-direct account, whether it be a government like a TSP plan, or maybe you work for the school system or local education system. Those are all types of plans that you can start self-directing if you choose to do so when you find deals and different strategies that fit your needs and your goals. A few different reasons that people start to self-direct is that they find out that it is a new source of capital they can tap into. Maybe you're already doing real estate syndication deals and you were not previously aware that you could invest into those deals with self-directed monies. Also, people are starting to get a little fatigued of the stock market fluctuation, so it's a good way to diversify and again, get a little bit more hands-on with your investment strategies as opposed to just putting it on the wave that is the open stock market at this time. And also the tax benefit of using self-directed accounts. Your investments can either grow tax-free or tax deferred, depending if you have a traditional or a Roth style account. So those are just a few of the key reasons that people start self-directing. I'm assuming most of you sitting there are thinking one of these three probably fit your needs. And again, please do your due diligence and make sure that if it does work for you, that's something that you take a serious look at and consider. With that being said, part of the due diligence I just mentioned, as a company, Advanta IRA and its employees do not provide any investment advice, and we do not endorse any specific products. So this material today is brought to you for educational purposes only. We do implore you to consult your own team of CPAs, tax professionals, legal professionals, and fiduciaries for that matter before you engage into any investment, and conduct all of your own due diligence before you make any specific deals. It's very important that you use the network of people that you know and that you trust with self-direction so that you're building a good foundation of people to come back and invest with further in the future, and that you're not getting yourself into any risky scenarios that you don't necessarily trust as you're going into it. A big part of self-direction is investing with the people you know, and we do always implore A, the due diligence, B, the camaraderie and teamwork. Quick tidbit on self-directed IRA rules. It's very limited what the IRS does not allow you to invest into. And for a quick range of that, anything that's a life insurance policy or what the IRS calls a hard to value collectible, like antiques, artwork, fine wine, things like that are deemed to be hard to value or subjective in valuation. So the IRS does restrict that. There are some precious metals that are not allowed, but there are also precious metals that are allowed. So if you're interested in precious metal investing, that's something you could definitely reach out to myself or the Advanta team. We could figure out if the precious metal you're interested in is allowable and then help you proceed on at that point. The other thing that the IRS does to restrict is prohibited transactions, which is basically your retirement account engaging with a disqualified person. The next slide, I'll go over what disqualified persons are, but basically any deal where you are engaging with a disqualified person, the IRS would deem to be prohibited. And as I promised, disqualified persons in this sense is any person that is of your lineal descendant or ascendant tree and your spouse. So you're not allowed to buy a house from your parents or sell a house to your children from your retirement account or vice versa. And pretty much those two slides go over the brunt of the rules and regulations from the IRA investing per the IRS's rules and regulations. As far as real estate assets, there are many different assets that you can invest into, whether it be purchasing a single family home, multifamily units, tax deeds and liens, real estate investment trusts, and as we're covering today specifically, syndications, whether it's into commercial property like self-storage or multifamily housing. Those types of things are all allowed within retirement accounts. And again, if you have any specific interest, feel free to check out our website to learn more, our YouTube channel for different videos and topics like we're making today, or reach out to Rodney or myself. Rodney, if you follow this presentation and have any questions for him, or myself for any IRA needs. With that, I'm just going to go over a very quick case study on investing into a syndication such as Rodney operates, just so you understand how you do that. I do have a question popping up. Is sibling considered disqualified person? No, sibling is not considered a disqualified person. It's one of the weirder IRS rules that I've found. You can, in theory, lend money to a sibling or invest in a deal with a sibling or through a sibling. That is allowed, although parents' children are not allowed. And thank you for the question. Again, anyone else that has any question, please type it in. We'll answer them as we go and as they apply to the topic or subject matter in the moment. So my case study here, I've got an individual named John who's got an IRA with one of those larger companies. He meets Jane, who's a syndicator that has a private offering on a local apartment building. Jane provides John all the paperwork and he does his due diligence, decides he wants to move forward. So John opens up an account with Advanta, submits a transfer request form that we then turn over to Edward Jones to request the money to move into his new self-direct account. And John also works with his client account manager to submit the paperwork to Advanta for review and execution. The paperwork is subscribed into in the name of John's IRA account and with Advanta's trust tax ID, not John's personal social. So there's no personal taxable liability tied through to this investment. And moving forward, once that investment's funded, Jane pays an 8% preferred distribution to all subscribers. John has this investment for about 5 years and receives a lump sum payout of $130,000. So his initial $100,000 investment yielded a total of $70,000 of earnings. The 8% preferred distribution for 5 years, plus the $30,000 chunk on the final payout. And again, as I referenced in one of my early slides, all of that earning is growing either tax-free or tax-deferred. That $70,000, if it were in a Roth IRA, would never have any taxable nature to it. If it were in traditional, whenever it is ultimately distributed out of the account, there's some taxable liability there, but that's always something that you'll work out with your CPA or tax preparer as you prepare for that retirement age and actually taking distributions out of your account. So I hope that's given a very brief but helpful look into this type of investment. And with that being said, I'm going to go ahead and hand over to Rodney for his part of this presentation. And go ahead, Rodney, take it.
Thanks, Corey. I think the timing and the content you just discussed is just perfect. So as you mentioned, I have Robinson Capital, and that's a company that will syndicate apartments and multifamily assets. But I'm starting off right now as a passive investor, and I assume many on the line are very interested in passively investing. But if you're also interested in actively investing, I think this content will be very useful either way, because it's all about mindset and education. So I look forward to sharing that. We could probably kick it off on the next slide. And like Corey said, questions, put them in the box, interrupt me. I look forward to just engaging and having some good dialogue and helping you all. This will be a lot of my story, but the goal of this is to highlight just some things that could help you all, and maybe some things you haven't considered. How do you make the time being a busy professional? So really the goal is to get through part one, invest for working professionals. How does it work? Here's my story. This is how I make it work. And here are the strategies I use to invest in the asset class called real estate. Part two is more of an example of what I do with my time these days. And I think it will be valuable for some online. So we'll get to that. And like I said, feel free to ask any questions. I'm very thankful to have this opportunity and share a little bit about me and how real estate investing is working for me. So I want to start with this just to kind of level set. These are my thoughts. Some are kind of, aggressive. But here's the thing. Everyone wants to invest in real estate, at least from what I've seen in the working environment. If you talk about investing in real estate, there's a little bit of excitement. It piques people's interest. Here's the unfortunate thing. Most working professionals do not know much about this asset class. Um, and for that reason, you probably shouldn't just take anyone's investment advice. What Corey was saying earlier was working with professionals and then networking. So it's very important to work with the right people and learn from the right people. Unfortunately, I've run into people that, they had a bad rap or heard a bad rap from real estate and they project it onto you. And it does leave you walking away from the conversation pretty down. So here's the point I'm making. As a working professional, you can lean on your professional counterparts for career advice, but unfortunately, they may not have the best knowledge as it pertains to real estate investing and the asset class. Um, so anyway, another thing is success and wealth creation will not happen overnight. So if you buy your first rental property, you invest in your first syndication, maybe you put together your first syndication as a general partner. It will not happen overnight. It's all about that last point, making time to network, grow a new sphere of relationship, and continue going at it. So the person who continues in this investment journey, whether active or passive, will do just fine. So I want to highlight my story here. So just a little bit about me, just to explain, my mindset and a little bit of my background. So I did graduate from the University of Central Florida, major in marketing, minor in economics. This week, I finally finished my master's. That's another part of my story. Because of my life, as you'll see, I have 4 children and a wife. I'm very busy. I decided to do one class a semester, and I started August 2017. This week, I somehow stumbled through my last assignment, and I'm done with my MBA. So that'll free up some more time for me, and we'll talk a lot about time in the future. But I was actually a leasing agent in college at one of the top student housing complexes in Orlando. I didn't realize how that would play a part, but it does. And the point I want to make here is no matter what you're doing, if you're an engineer, if you're an attorney, if you're a program manager, if you're a supply chain manager like myself, somehow your skill sets could align with the knowledge, education, experience, success you need from, or you hope to achieve from real estate. So altogether, my professional career is about 10 years in supply chain management within the aerospace sector. And then, like I said, married with 4 children. And that's the key point here. Whether you have many children, no children, I think all together we have one thing in common. We're very busy people. So thanks for making the time. I'll talk a little bit about my investment journey. We bought our first house in 2016. That's not there. That became our second rental. We bought our first actual rental to fix up in 2019. And then we moved out of our first house, which became our second rental. And I started focusing on multifamily in 2020. And there's a more defined timeline in the future. But I just want to highlight a little bit just to explain that I'm very much just like you. This isn't one of those webinars or podcasts where you're talking to a full-time real estate investor. I definitely understand the struggle here. All right. So I've worked at various companies. This highlights a little bit of what I said earlier. I've tried new things. I've been in supply chain the whole time. I've grown. The point I'm making here is, starting from an entry-level employee, I said yes to many opportunities, even as I had a desire since 2013 to invest in real estate and didn't start till 2016. And, seriously, in 2019, I can't discredit the job and what people call the W-2 and work. A lot of people, they seem to bad talk what they do every day because they have bigger aspirations. And I hope for you, if you're good at something, you're good at something and you're adding value through your work. We'll talk a little bit later about how you turn that earned income into passive income, whether you're looking to actively invest, managing, finding, financing your own deals, or passively invest, which is, invest with other people and close your eyes and let the disbursement checks come in and things like that. And that still takes a level of management. So I talked about this a little bit. I started working in my professional career in 2012, but in 2013, I decided that I really really, really want to invest in real estate. I understood the wealth building power. I envisioned exactly what you see here on the left side of the screen, apartments from day one. And I believe that you had to start from square one, which is not exactly true. I'll go ahead and give it away. The biggest determinant of your success is the right education and the right network. So there it is. We could stop right here. Just kidding. So I talked about what I did with the single families. And then in 2020, I went to a conference where it was all about multifamily and how anyone can invest in multifamily. And I met a lot of people just like me that are working professionals that are actively investing in apartments, and then those who are passively investing in apartments. So this message is for both of you. Similar to what Corey was talking about, I decided last year to roll over some old 401ks, and what I did was an EQRP, but definitely talk to Corey about the self-directed IRA if you're interested. Most people do not know about that. Working professionals, they don't know about that. If they're watching anything, they're watching their 401ks and their small stock portfolio, which is great, but diversification is so important. And this is why I started Robinson Capital. I started blogging, and I started saying yes to opportunities such as this. So in 2021, I did become a passive investor in a real estate fund. And I think that's a good next step for me. And the goal altogether is to put together some great opportunities to invest in apartments for my network also. But for you, how do you make it all work? I think the way you start is asking, before you can even take that first step, you have to ask yourself, why? Why is it worth the journey? Why is it worth the effort? Why would anyone want to invest in real estate? Hopefully by now you recognize that there are some true wealth building levers from real estate. That's appreciation, that's cash flow, that's tax benefits, it's debt pay down. It's a good hedge against inflation. But unfortunately, like I said earlier, there are a lot of horror stories. And here's something good for you to know. In every single horror story I heard from someone who hasn't invested in real estate or hasn't invested, with education in real estate, there was something they didn't do right. There was a lesson learned, and I appreciate those horror stories because I'm very attentive to those lessons. So the point I'm making is, don't take advice for your coworkers. If you're going to listen to them, pay very close attention, because most times, and in my case, each and every time, that horror story did not add up. Someone, trashed their house. Did they screen well? Um, you know, um, they're fixing toilets at 3 a.m. Okay, so they don't have a property manager, or they chose to take a path where they work in their business and not on their business. Those are different examples, and I'm not criticizing. These are just lessons that I've learned over the years. And sometimes it's good to sit back and be patient and build a foundation. And I believe this is what I did, even when I don't really appreciate, the time it's taking, and I want to do things on a faster timeline. Each of these conversations I've had with people have gone into my brain and into my notes, and I write about them on my blogs so that other people can learn from these mistakes, and then most importantly, learn from those who have done it. So the last point here is, everyone's story and path is different. That includes you. So everyone that's listening to this has a different story. So if you're listening to a podcast and someone just got into real estate and has a 24 unit, or just invested in their first deal, or now has a 34 unit portfolio and they're 28 years old, congratulate them, celebrate with them, but recognize that you have a different story. My particular story is, I'm married. I work a job with responsibility. We have 4 children. We're very busy. So we have to do what makes sense for our own personal lives. And that's based on our own investment criteria and risk profile. So I know I'm going fast here, but fire away the questions. And if you don't have questions, I'll ask my own. What were you going to say,
Rodney,
Corey?
yeah, there was actually a question that came in I was about to interject with, so it was good that
Yep.
you had it on your mind as well.
Yep.
Based off of what you just said for new investors getting started, and even your last point on that last slide about just in this calendar year having done your first investment into a syndication style deal as a passive investor, someone asked, what is a suggested minimum amount to capitalize and self-directed invest into a syndication or multifamily deal? Do you have an
Okay.
example you see as standard, or what you're looking
Yeah.
for? Go ahead.
Yeah, I'll be really open here. Typically, you're probably going to see about 50,000. Typically. But I've also seen 25,000 as a minimum. So I'll tell you my example. So I've worked at various companies and I had these various 401ks, and I decided to roll them into, something very similar to what Corey and the Advanta team offers. And I happen to have like right under 50, right? So there was an opportunity where I found out, with someone that I work very closely with, and admire, that he had a minimum of 25. So there might be limited spots for that, but definitely, number one is find the right partner. That's the right sponsor. That's the right syndicator. Make sure you understand that track record, know them well. That's the number one determinant. And then find out what their qualifications are. Many of you are probably not what they call accredited investors. And that's one requirement if you're going to do a 506c offering, not to get too technical here. But other exemptions from being from that requirement is having a pre-existing and substantive relationship with someone. So the point I'm making here is get to know people. You don't have to have like a high net worth to invest passively in apartments, but you have to have that relationship, and that's more important than how much capital you have. Find that right person first, and then find out how you can participate in the right opportunity. I hope that answers it. Okay, so making it all work, blending the two worlds of career and investing is hard, but I encourage you to do it. Otherwise, you feel like you're conflicted. So here's the point I'm making here is, for a while, I thought there was my work life, then there was my investing aspirations. But the thing is, your success in work might be a very important indicator of your success as an investor. What quality of work and effort do you put into your job? What would people say about your quality of work and the amount of success and your commitment to the job? If you're going to invest, I challenge you to invest in such a way with your time and attention that people wouldn't even notice you have another effort outside of your job for growing wealth. And in my case, as someone who's building a company, that strong track record is important, whether it's supply chain or investing, because people that know me know the quality of my work. And if you're interested in passively investing, if you want to be a passive investor in apartments or multifamily assets, I think the same applies. I mean, do you do the same due diligence and the quality of work as you do in the opportunities that you're looking for? I mean, and briefly, Warren Buffett's rule is to not lose money. So, it's very important, in a world where there are so many, investment dishes being offered, to understand what's a good deal and what's not. And I think going through that same amount of effort as you would in your job is important, and also not sacrificing your work. So give the company 100%, say yes to opportunities. I did. At some point, you get to a place where if you're going up and getting more responsibility, perhaps you have to say, does it make sense to take more responsibility, recognizing I have other aspirations? But in many cases, when you get those opportunities, they may help you. I said yes to more responsibility, and that often meant more income, which helped me continue to grow the real estate investments, or at least cash to get ready for those opportunities. So after having that same commitment and making sure that somehow mentally you've blended those worlds, build your business, whether you're an active investor or a passive investor, in your off time. So I'll talk about that on the next slide. This is my example. It is extreme, but it worked for me. And maybe it's not 4 a.m. for you. Maybe it's 5:30. Maybe it's 6. Maybe it's just an hour earlier than what you get up at. But I had to do this. I had to, because we have a 7-year-old, a 5-year-old, and 2.5-year-olds. And I could make an excuse, and it would be a good excuse. My friends would pat me on the back and they'd say, "You're right, Rodney. It's tough for you," right? But that doesn't mean results. So I had to get up at 4 a.m. And I get up at 4 a.m. from Monday through Friday. And I will say there sometimes I don't hit that mark. Lately, I haven't always hit that mark, but it's the target and that's the goal. And I have a routine that happens at 4 a.m. to help me achieve what I call just being a whole person and the investment growth. because I can't do it in the afternoon. I can't do it any other time. I can't do it during lunch. Once I get in work mode, I'm in work mode. I'm sure many of you understand. If our kids are getting up at 6, I have to beat them. And so anyway, my routine is I get up, I have some sort of devotional, I read, I get educated, just something that's good for my own health. I tend to exercise most days somehow. And then the real meat of this time, the real reason for getting up early is so I can get in that 1 hour of what I call business execution. So whether you're an active investor or a passive investor, that business execution is so important. And I'll talk about the difference between, let's say, business planning and business execution in a second. But I begin my day well before my coworkers do. And that's not a comparison. It's a fact. Some people probably get up early like that, but many of the people that we work with, they don't have the same goals. So it works just fine, but I have to do this if I'm going to feel that peace. Jeff Bezos said in one interview, if you're feeling anxious, it's probably because there's something you're supposed to do that you haven't done. And I tend to agree. I can't find an exception to that. If I'm feeling anxious, what active steps have I taken? This 4 a.m. routine has really helped me. So whether it's 4 a.m. for you or 5:30 or just 1 hour earlier or sometime in the evenings, I encourage you to make that time. On my blog, I wrote about that, and there's a little more detail. But I actually think this piece right here is going to be a game changer for most people on the phone or on the webinar. So I just want to emphasize that. But when I call it execution, I'm not an expert at this. It's a discipline thing. Most of us know how to eat healthy, but we don't do that, right? We don't always eat healthy. Most of us know what effective work is, but we end up wasting our time doing emails and things like that. We all know what that's like. So what I'm trying to communicate is taking it from a mindset thing to an action thing. So in that 1 hour, most of the time, I try to do business execution and not business planning. So planning is what I refer to as, what are the strategies? What are the goals? What am I going to do next? That's all the planning you're going to do for, making things happen. The business execution is, let's make this stuff happen. Let's actually take the active steps. And I want to remind you, whether you're an active investor or seek to be an active investor or seek to be a passive investor or are a passive investor, both of this applies to you. So if you're a passive investor and you're looking to passively invest in opportunities, you're still vetting potential sponsors. Your business execution, I'll give you an example. Your business planning is, here are the sponsors I'm going to look at. These are the deals I'm going to look at, their offerings. Execution is taking that time in the morning or whatever time to understand that deal, understand that market, understand why it's a good deal. And that's the difference. In my case, transitioning from single families, this is the best example of the difference between working in and working on your business. Working in is where you tend to see and hear those horror stories. Fixing toilets, reacting, doing it all yourself. It's horrible. I started that way for a little bit, and I appreciate the experience. I knew that my leasing management, experience in the past would make me a good person to sign leases, market, manage, tenants. But at the end of the day, even if I'm really good at it, that doesn't mean I should be doing it based on my goals. So working on is perhaps hiring a property manager, holding that property manager accountable, as that's what I did with my single families. Or like I described, as I focus on multifamily, or as many of you may focus on taking your next step as a passive investor, just understanding deals, understanding markets, most importantly, understanding how apartment syndications work. And then leveraging your team, or as Corey said so well earlier, networking with others. So any questions there? Okay. So
there's been no further questions in the block. Again, I'll just take this opportunity. Please feel free to interject your questions into the questions block on GoToWebinar. I will pause Rodney as they come in and ask him to answer them. So please feel free to actively participate. I won't call out any names by name, so just throw your question in there and I'll make sure it gets over to Rodney as soon as I see it pop up.
Yep. Any questions you ask, I'll spend time on. I want to make sure that we're hitting on the information that is most valuable to you. As we wait for any questions, carving your own path. This is a some sort of fork in the road or the path, and I think it's a good description of some of the dilemmas I've had in my own life. How do I do this? My life is different from others, just like your life is different from others. How do I, invest in a way that works for our family and not works against our and doesn't work against our family? And I think you really have to be grounded. You really have to be grounded. You can't get excited about everyone making money in Bitcoin or Tesla and missing that bus. You can't get excited about everyone, closing deals in Texas and Florida, and you live in Florida like me. You have to understand that that's their path. What's your path? Are you taking your next step? So don't get caught in the hype. I've seen people pay big money for education, and maybe it was good for them, but I encourage you, do what you're doing right now. Get a lot of that free education. And when you exhaust your free education, go ahead and pay for something, but get that free education. You don't have to pay multiple tens of thousands of dollars to learn about real estate. Most of those people, unfortunately, probably will not find success in real estate, and it's very sad. So I encourage you, I have some resources at the end of all this that I read and that I learned and really helped me with mindset, education, learning about rental properties, learning about apartment syndications. But, and I'll briefly say the two things that I've already said. Understand your criteria. That means, what are your investment goals? What strategies have you considered? I have some strategies, just a few of hundreds of so many strategies that you could consider, whether it's buy and hold or partnerships or investing as a limited partner and multifamily or doing notes or doing other sorts of commercial real estate. But anyway, you have to think about what the benefits are for you and do what works for you. What's your situation? Does the strategy align? And try to make the two worlds work in real estate one. I'll briefly say what I've chosen to do was, even though real estate is going to keep me busy because I've chosen an active path, it's my desire, it's my passion, but this business that I'm building is going to work for me. Some people, they want to be their own boss, and then they find out that their new boss is a jerk because he demands so much of them, because it's themselves and the ambition that they created and this culture that they created. And Robert Helms from the Real Estate Guys podcast once said, you don't want to climb the mountain to get to the top and find out you climbed the wrong mountain. So think about that. I thought about that, and that hit home with me. So really think about carving your own path and how that works. There's so many ways, so many examples. Okay, next.
Rodney, we've got a quick question. I'll answer it a little bit from my side, and then obviously I would like you to also interject. The question is, should you set up an LLC or S corporation to run your investments through? From an IRA investing standpoint, it's definitely an option to set up either what's known as a checkbook control LLC, or just invest into the entity directly through the IRA account. From my side of the table, it is pretty much the client's decision and their case scenario, like Rodney just mentioned, what works best for that client. There's a little bit more hands-on control when you invest through an LLC with an IRA account, and an S corp. That's obviously something outside of the IRA account. The closest thing in my world that would relate to an S corp setup would be such as the EQRP, like Rodney utilizes, or a solo 401k, which is the equivalent version of account type that we offer at Advanta. But Rodney, feel free to add your input as well.
No, I think you said it well. It's good to have that protection. So, that covers the passive investing side. And of course, with, the more assets you manage, the more you should be thinking about those things. On the single family side, certainly also, many times there are some hurdles to doing that. If if you have a loan, in my case, I will be transferring my assets to an LLC once that period that they allowed me ends, and I could transfer from my name to my company. But yes, so this is a visual. It's a very poor and basic visual, but maybe it's just that simple. So anyway, most of our lives look like this, and there's really nothing wrong with this. This is natural. We work, we earn income, and we have so many expenses. I just put them in a few boxes because I'm lazy, but hopefully we're saving and we're putting money away for investing, whether it's the 401k that we could later roll into, an IRA or something like that, or we're saving for events. But that middle box, living expenses, It's growing. It's growing whether we recognize it or not. A lot of us feel rich, but prices are getting really high. So I just want to emphasize this point here. Over the years, I realized that with my wife working from home, one income and 50 expense streams, one income stream, 50 expense streams. And that really emphasized the importance for me on multiple streams of income, passive income, whether you're active or passively investing. And that'll kind of highlight the next slide here. So, when I bought my first single family home, this is what it looked like, except that dot should be really, really small. Compared to my primary income, what it produced was very small. Remember, the first deal may not make you rich, most likely will not. But it's the law of the first deal, the law of that first opportunity, whether it's a good one or a bad one, that should propel you to continue the path, so that perhaps your investment journey looks something like this. The next one. That's where you have, income streams feeding your passive income machine. And you see that passive income machine getting larger compared to your earned income. I'll tell you, I'm not here, but I definitely see, the compounding power of getting multiple streams of income and collecting. Yes, we put in some work to fix up rental properties, but at the end of the day, aside from operating expenses, you start to see that income, and it's nice when you're getting cash flow and you see the concept work. And really, let's say the goal for the people on this phone should be the next slide.
Rodney, hang on one second. There's a question that came in.
Go for it.
I have zero interest in becoming an active real estate investor, i.e. hands-on property manager, but I am interested in learning more about the real estate syndication opportunities. Do you have resources or things to keep in mind when searching for syndication opportunities and when vetting individual offerings?
Yes. So that is a very detailed subject. I'd say listen to a few podcasts, read a few blogs. I have to say I recommend reading my blog. But there are other good resources out there. And in this slide deck, you'll actually see some of the resources that I recommend. But learn how that works. And I think that's a very good next step for you. Very good question. Very good question. Oh, I forgot I made this title, Yeah, Baby. So this is what happens when you stay the course. Everyone's timeline is different. And this isn't like heaven, guys. Like, no matter what, investing is work. And even when you have, passive income, you have to manage your assets and things like that. But when I think about this, I get excited when I think about legacy and freedom. And I talk about freedom a little bit differently from others. A lot of people talk about financial freedom, quitting their job. I think having the option to do that is great, but many people may not do it. Maybe people on this phone love what they do. Maybe like the person that just asked the question, you like the idea of passive income. So now you're not working paycheck to paycheck, not to say we are, but sometimes we might be. And you can do your job because you love it. And you could decide that maybe someday you'll just switch it up. Maybe you'll teach. Maybe you'll, work at a church. Maybe you'll just get on a sailboat for a few months. I've known people that are actively syndicating. One person sold his house, he and his wife, and they're just doing the Airbnb thing right now. He's working a full-time job, but he's living in different homes for the next year till they decide what to do. And that's the freedom I'm talking about. It's the freedom to live your purpose. Unfortunately, in America, so many people are burdened financially, and they spend most of their time. I would say that they're probably spending most of their time, dealing with financial hurdles versus purpose. And that's my encouragement for you. So I quickly put together just a few different routes: active to passive, red to green, and there's so many in between. But I just want to highlight for your later reference some of these investing strategies. Where I tend to operate is in the middle. I can't fix and flip a house right now. There's no way. But I can own some buy and hold rentals in my personal portfolio. I can work on building this apartment multifamily business. And some of you should consider what works best for you. Maybe there are some people on the line that want to fix and flip, but it's a little bit different from what I call, investing, where you get cash flow, the asset pays you to own it, but there's a reward there also on one end. Okay. So here are some resources. These are some things that help me. I have so many, but I want to keep it simple. You don't need to read each of these books, but mindset, if you feel, I would say focus on where you are, right? If you need to take that first step, mindset, I'd say read some of this stuff. This will help you understand, what's possible, that there's a different life versus just earning your income for the rest of your life. The 4-hour work week is awesome. Tim Ferriss has really good approach to living, kind of challenges the concept of work 40 years just to see if you like retirement versus, take mini retirements. And then other investing strategies, being a buy and hold investor, and then passive investing. These are two people I know pretty well that wrote some really good books on what it looks like to be a passive investor. So that may help answer that question that we had a few minutes ago. And then these are my top 3 podcasts right now. Like I said, make it very simple. Just choose one next step. Don't choose 15. And I think as long as you're taking the next step, you're getting educated somehow through your mindset or understanding investing, or taking that next active step for you. I want to go back to that last slide. I don't know that we're going to have time for the second one, but I'm going to talk about lessons learned, and then I'll highlight what you'll see if you go through the slide deck for part 2. But lessons learned, very simply, mindset is key. Understand the advantages of investing in real estate. That's the first step. Otherwise, why are you doing it? And then appreciate the power of passive income versus earned income. And it doesn't mean you just someday decide to bail on what you do for a living, but it's just nice to have the option to, based on not having certain hurdles, and just seeing that it's possible with that mindset part is very important. Get educated immediately. So read, listen, network, and follow only. I should have capitalized it, bolded it, and underlined it. Good models, because there are lots of bad models out there. There might be good models for some, but not for you based on your situation, family situation, risk profile, things like that. And then finally, and all of these are important, but for now I'll say the most important part of making it happen is finding the time to make it work. So be stubborn in your discipline. That means if you're going to get up at whatever time in the morning, make it happen. And maintain that success even in your career in the process. Don't feel like it's a hindrance, because at least in my case, it's what allowed me to become more of a professional, for one thing, and then earn the income in order to participate in these great investment opportunities. So any questions there?
No questions have come in since that last one, requesting information about vetting and just different resources.
Okay.
So I don't know,
Okay.
as you just mentioned, if you wanted to jump into any of the further slides, or if you want to call this a good stopping point, and maybe we could pick up and do a second session with you, Rodney, to cover your second portion of the presentation at a later time. I
That's a
do
great idea.
obviously want to be respectful to everyone's time that signed up for the webinar. We typically try to schedule these for about a 1-hour session. So if that works for you, I feel like that works for me as well.
Yeah, that'll work just fine. I think if I get into it, I'll dive into it. So I do believe if there's another opportunity, I'd love to talk about it later. But this, the focus here, and I hope the takeaway is for anyone on the line is what can we do next? What is your next step? And hopefully the information was helpful.
I'm just going to jump back to our slide at the beginning with all of our contact info. And if you have some time, Rodney, let's just stay on for a few more minutes and let anyone that's kind of wrapping up with us ask any last minute questions. And we'll go ahead and close out in 3-4 minutes, or whenever the questions stop coming in once they start. Okay.
That works.
Perfect. Well, again, while we're waiting for those to get typed up, I do very much appreciate your time and your energy spent working with me over this past month in scheduling and planning and coordinating this webinar. I mentioned it at the top. I had just seen you present on another networking event I participated in a few months back, and was instantly drawn to the energy that you brought and your experience and your journey and the way you articulate it. It just was very captivating for me to just learn from someone that approaches getting into real estate investments so humbly, in my opinion. Whereas I, I'm in the industry and I've learned about things as I go working with a self-direct administrator, but there's certainly several things that, I might not know about when I'm in a conversation. And you've done so well, both in this presentation and hearing you in previous, just to articulate it at a baseline level that anyone should really be able to understand if it's something they're interested in getting into. So
Yeah. Thanks,
thank you.
Corey. Yeah, I appreciate the opportunity also. I mean, this is a growing opportunity for me, and we all have a journey. And, so we're all growing and learning from each experience.
I'm not seeing any questions popping up just yet. So if you have any other last minute points to add anecdotally, if you will, feel free to.
Well, I think I'll leave this panel with just some encouragement to get started no matter where you are and put down some goals. Something I didn't mention earlier was what really got me to buying that first rental property in 2019 was I didn't have goals written down and they weren't time oriented enough. And so what I did was I made a 60-day goal to get my first rental property, and we did it in like 30 days. And that's not everyone's story, but the point is we made a serious commitment to make something happen. Really, in the time frame took 6 years, but I think if I had done that sooner, maybe we would have been able to have, more success sooner. But anyway, put some goals together.
Yeah, I agree with you wholeheartedly. I don't know if this is part of your goal mindset as well, but my wife and I strongly believe in vision boards. We have a
Oh, it's
cork
good.
board that we cut things out of magazines, whether it's home improvement stuff or, right now we're expecting our first child in a few months. So our vision
That's
board
awesome.
right now is just filled up with baby things, but anything that you can have to set your goals in front of you visually and on a daily basis will help you take strides towards achieving those goals more so than if you just keep them in the back of your mind and don't put that out into the ether, into the universe.
Yeah,
I
you're
strongly
right.
believe.
You're right. Yeah, because now you're accountable. They're documented. It's up there. It's something you and your wife are looking at together
Of
to
course.
push it.
And, when you take that scary step of telling people out loud what your goals are,
Oh
that
yeah.
also adds to that level of accountability, whether it's, a close friend or, someone that might be in the industry of real estate investing or any investing for that matter. When you
Yep.
take that scary leap of actually saying it out loud and, who knows if that might end up leading to a partnership for you or an opportunity that comes across just by, opening your mouth and speaking into existence what you want to happen.
Yeah, you're exactly right. Yep.
So I don't see any questions coming in. I did have 3 different posts just thanking you. Very insightful. Looking forward to part 2. Thank you. Would love to hear more specifics on your journey next. So I think we've gotten a good crowd response, and we'll for sure schedule up something to have Rodney back on our Advanta webinar series in the near future to cover that second part of this presentation and jump a little bit further into his journey and how we can help you ultimately achieve your goals as well.
That's
Rodney?
awesome. Yeah, thank you everyone for the good feedback. And I do look forward to next time. And then also thank you, Corey, for the opportunity.
Of course, of course. Like I said, I was very much drawn to you after our first interaction with each other, and I think it's a great fit. Us, again, just networking and working together to achieve common goals of educating and helping people achieve what they want to achieve. So
Yeah.
thank you so much for your time. I really appreciate it. Everyone that's listening, if you are here live with us, this recording will be posted onto our YouTube page within about a day or so. And for those of you that may have signed up for the recording and are not here live, I guess it kind of doesn't make that much sense, but it will be emailed to you as well. So if you maybe had to sign out or signed in late, the recording will be emailed to everyone that signed up, and you could always reach out to Rodney or myself for further information or content. Thanks again, everyone. Have a great rest of your day and enjoy your weekend.